the world is in a very interesting spot. Disorderly treasury market activity, move index, volatility index is on the rise again. Conflict in the Middle East. Warsh can't cut, he can't hike. I mean, everybody is starting to say the quiet part out loud. We're going to need some form of yield curve control, some form of Ponzi-nomics. And the question is, there's $40 trillion missing. Someone has to realize that loss. That time, that energy, that effort, that labor, that's gone. Who's realizing that loss? Who's paying the price? And as a Bitcoiner, every sat you stack, you're saying, I don't know, but it's not going to be me.
The market is starting to feel unstable again, and you can see it everywhere. Bitcoin volatility is rising, treasury markets are flashing warning signs, and global tensions are putting investors on edge. At the same time, the headlines coming out of the Middle East keep changing by the hour. One moment President Donald Trump says negotiations with Iran are proceeding nicely and hints at a historic Middle East coalition tied to the Abraham Accords. The next moment, Iran's foreign ministry says there's no deal close to being signed, while CENTCOM confirms new U.S. self-defense strikes inside southern Iran. And while politicians try to reassure the public, markets clearly are not convinced. Bitcoin ETF outflows are accelerating, risk models are flashing warning signs, and investors are beginning to wonder if the system is a lot more fragile than central banks want people to believe. Underneath all of this is a much deeper problem that people like Jack Mallers have been warning about for years. Massive debt, distorted markets, artificial liquidity, governments borrowing from the future to keep the present alive. Mallers argues that Western economies have spent decades kicking the can down the road, from the dot-com bubble to the housing collapse to sovereign debt markets, and now potentially to currencies themselves. And if that's true, then what we're witnessing today may not be temporary volatility at all. It could be the early signs of a financial reckoning that exposes just how much of the global economy has been held together by leverage, money printing, and confidence games. In today's video, we're going to break down Jack Mallers' latest warning about debt, market instability, and what he believes is coming next for the global financial system. We'll also look at the collapse in Bitcoin sentiment, why institutional money is behaving so differently this cycle, and how geopolitical tensions could become the catalyst for a much bigger move across crypto and traditional markets. If you enjoy macro analysis, Bitcoin discussions, and market breakdowns like this, make sure to like the video, subscribe to the channel, and turn on post notifications so you never miss an update.
So I thought this diagram was interesting because there's many ways to show that Bitcoin sentiment's just at all-time lows. Well, all times maybe a stretch. It's at lows in recent memory. And I thought this visual was unique and interesting way to show that is this is the total venture capital activity, and VC activity and Bitcoin usually go hand in hand because it's a new technology sector. And, you know, I've thought of Bitcoin as some combination of fiat liquidity plus technology, and venture capital and investment in building companies, building infrastructure, disintermediating things like payments, cross-border, store of value, lending, credit. And VC has been highly invested over the last 15 years in Bitcoin. And what we're seeing is the dark blue bars are lots of capital being invested. So there's never been more venture capital dollars invested, but the deal count has never been lower in the last 5, 6, 7, 8 years. So what does that mean? That means there's a highly concentrated amount of capital being deployed in a small amount of deals. Anthropic, OpenAI, SpaceX. And this is another way of saying what I've been saying. K-shaped economy, AI economy. Everyone else is in pain. So you're seeing SpaceX is going to be one of the biggest IPOs ever. Anthropic, one of the fastest growing revenue run rates of all time. OpenAI is going to be the second biggest IPO ever behind SpaceX. Boom, hype, all-time highs. Then you look at Coinbase's earnings, and Coinbase missed earnings by a mile. They got crushed. And so the K-shape is not just the McDonald's fry worker and Sam Altman. That's not what I mean by K-shape, although that's obviously included. K-shape is like Coinbase is really struggling right now, while SpaceX is gearing up for a $2 trillion IPO. And this VC asset is super interesting, is that yes, there's never been more capital being deployed, but the deployment of that capital is going into the smallest amount of hands that maybe we've ever seen in the venture capital era. And then the most obvious way to visualize that Bitcoin's just having a tough time right now with mind share and just overall consumer sentiment, retail, is its Google search trends. So Bitcoin as a search term has not been lower than it is today in the last 5 years, like dating back to COVID days. So like FTX, Sam Bankman-Fried, 2022, yeah, as far as a search term, like we're lower. We're lower than after that. When everyone mailed it in, give up on Bitcoin, it's a fraud, it's a scam. Like we're lower than that. And this is why, let me tell you guys something. One of the hardest things I've ever done in my life is stay humble and stack sats. Everyone that tells you it's easy or you got lucky, remember these times. It is not easy. It is not easy. It's one thing to buy a little bit of Bitcoin. It's an entirely different thing to hold it. Remain convicted. Don't let them shake your conviction. As my dad always says, markets try and wear you out or scare you out. Hold strong, fasten your seatbelt, head down, lower that time preference. People fantasize about buying the lows, buying the dip. But when the dip hits them in the face, they get too scared to buy. That's why I highly encourage you guys, stay humble, stack sats, turn on those DCAs. At Strike, you can DCA on Strike for free, no fees. You can withdraw those Bitcoins to cold storage for no fees. You can even automate that whole thing. It couldn't be a better time to average in to Bitcoin. Maybe Bitcoin dips a little bit from here. Good, you're buying. Maybe Bitcoin appreciates from here. Good, you've been buying. You can't lose as long as you've got a low time preference, you're earning more than you're spending, you're humble, you're patient, you're convicted.
Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit, you could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth, tax-free. You keep the full $50,000, same crypto, completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time. What makes Maller's argument so powerful here is that he's not simply talking about Bitcoin price action. He's talking about psychology. Markets don't just test people financially, they test conviction. And according to Maller's, that's exactly what we're seeing right now. Retail investors are exhausted, sentiment is weak, and capital is flowing aggressively into a tiny group of AI and mega-tech winners, while almost everything else struggles for attention. But historically, periods of maximum doubt have often created the foundation for the next major move. That's why Maller's keeps emphasizing patience, long-term thinking, and lowering time preference instead of chasing short-term hype. And this is where the charts and data become incredibly important. Because what comes next in the video isn't just opinion, it's visual proof of how capital concentration, collapsing retail interest, and shifting market behavior are reshaping the investment landscape in real time. The numbers paint a very clear picture of where money is flowing, who's benefiting from this economy, and why Bitcoin may be entering one of the most psychologically difficult phases of the cycle.
The world is in a very interesting spot. Disorderly treasury market activity, move index, volatility index is on the rise again, conflict in the Middle East. I mean, Warsh can't cut, he can't hike. I mean, everybody is starting to say the quiet part out loud. We're going to need some form of yield curve control, some form of Ponzi-nomics. The Western civilization has kicked the debt, the borrowing from our future, the misallocation of capital. $40 trillion pulled forward from our future and spent where we have nothing to show for it. And that was kicked from the dot-com bubble to the housing market, kicked from the housing market to the treasury market, kicked from the treasury market to the currency market. And here we are. Got to face the music. And the question is, there's $40 trillion missing. Someone has to realize that loss. That time, that energy, that effort, that labor, that's gone. Who's realizing that loss? Who's paying the price? And as a Bitcoiner, every sat you stack, you're saying, I don't know, but it's not going to be me. I don't pretend to know the answers. I don't pretend to know the future, but I know that they can't take my time and energy. I'm not paying for the mistakes of the past. I'm not paying for the mistakes made by men and leaders before I was born. And I'm not letting men and leaders of today steal the time and energy of my future children. You guys have fun duking that out, battling that out, politicking that out, but it's not going to be mine. So, in summary, as much as things remain the same, sentiment at lows, war ongoing, inflation ticking up, Ponzi-nomics really hitting potential breaking point, I mean, stay humble and stack sats, man. Stay humble and stack sats.
What's becoming increasingly clear is that investors are living through a market environment unlike anything we've seen before. On one side, you have governments trying to maintain stability through debt expansion, liquidity injections, and intervention. On the other side, you have growing geopolitical instability, rising volatility, and a public that is slowly beginning to lose confidence in traditional systems. That combination creates a very dangerous setup because once confidence starts breaking down, policymakers are often forced into even more aggressive responses just to keep markets functioning normally. And this is why Mallers keeps returning to the idea of Ponzi-nomics. Whether people agree with the wording or not, the broader point is difficult to ignore. Modern economies have become heavily dependent on perpetual growth, cheap credit, and constant refinancing. The problem is that eventually the bill comes due. Debt can be rolled over for years, even decades, but it cannot expand infinitely without consequences. And if central banks eventually move toward more forms of yield curve control or monetary intervention to stabilize the system, many investors believe scarce assets like Bitcoin could benefit dramatically from that environment over the long term. But at the same time, none of this means the road ahead will be easy. Markets can remain irrational longer than most people expect. Fear can push prices lower even during fundamentally bullish environments. Geopolitical conflicts can create sudden liquidity shocks. And as Mallers pointed out, one of the hardest parts of investing is surviving emotionally through periods where conviction is constantly being tested. That's why understanding the bigger macro picture matters so much right now, because the people who focus only on daily price swings may completely miss the structural shifts happening underneath the surface of the global economy. Ultimately, this is becoming a battle over trust. Trust in governments, trust in currencies, trust in financial institutions, and increasingly, investors around the world are looking for alternatives that they believe cannot be manipulated, diluted, or politically controlled. Whether Bitcoin ultimately fulfills that role on the scale many expect remains to be seen. But one thing is certain, the next few years could completely reshape the global financial system as we know it. If you enjoyed this breakdown, make sure to like the video, subscribe to the channel, and share this video with someone who's trying to understand what's really happening in the markets right now. Thanks so much for watching, and we'll see you in the next one.